Chapter 4, feels good. We're just going to do this first section. As Jenna just alluded to, it makes sense. You get it. It's a points hog on a test, but because there's a lot to it. It might not hurt to have the portion of the book with the transparencies accessible, just because you'll see the step by step as I show them to you. And I would like to do one exercise if time permits. So what is a worksheet? It's got many columns, multi-columns. It's a form that I would say is internal, meaning it's used by the accountant. It's not something that gets publicly produced. It's not a financial statement, but it's like a tool used to prepare the financial statements. It's a quick way to make sure your debits and credits equal and know what goes where, but just it's not something that's permanent. It's more like, as its name implies, a worksheet. It's just to work through the numbers to make sure that they're going to work out. There are 5 steps. You could absolutely do financial statements without a worksheet, so using a worksheet is optional. Here's, of course, what a worksheet looks like. Again, you see the columns. You see some stuff that actually everything you see on there, you know. You know, there's the trial balance and the adjusted trial balance. How you get from the trial balance to the adjusted is you have to do the adjustments. That's everything we did in Chapter 3. Remember, the debits and credits will probably equal in the trial balance, but is that the true story? No, because we've used things, or accruals or deferrals have happened. From there, you use the adjusted trial balance to either transfer stuff to the income statement or the balance sheet. So the 1, 2, 3, 4 steps. You prepare your trial balance, you do your adjustments, you do your adjusted trial balance. So instead of doing those all separate like what we've been doing, it's all on one spot. Step 5 is the tricky part because your income statement and balance sheet won't equal in step 4. They won't equal. And you'll use, hopefully, net income to get them to equal. And it's kind of the cool part about accounting where all of a sudden the stars align and all the numbers totally make sense. So let's go through like step by step. And this is what, I don't think it's in your actual, yeah, it's not in your notes, but you'd want to use like the little transparencies in that middle of the chapter. So step 1 is you prepare the trial balance. Now you know what all these mean. Some of them are balance sheet accounts, some of them are income statement accounts. But you'll see your debits and credits equal. That's step 1. Step 2 is actually taking a look at the adjustments and putting them in the column. So you guys remember doing all of this from last chapter, right? It's just then plugging them into the adjustments column. Now notice the first one. Supplies, with a supplies expense. So if I just circle supplies and I circle supplies expense, I see 1,500 and another 1,500. Notice how they're labeled. They're labeled A, B, C, D, E, F, G, or however many you need. So again, if I go back here, supplies was the first adjusting entry, but instead of putting a 1 there, we'd put an A there as we bring it in here. Instead of the second one being insurance expense as number 2, no, we'd list that as B, C, D. They're labeled alphabetically. I could assume they're labeled alphabetically because could you see if you'd label them numerically, it might throw you off with your numbers. Okay. Now notice though, we've got a total here and we've got a total here. So you're always totaling the columns. From there, we're going to move on to step 3, and so you might want to like lay the next transparency over. Step 3 says, okay, let's see what we did in the trial balance. That's all based on normal balances. We're going to cruise along and adjust, and it might be a plus, it might be a minus, to form what's called the trial balance. So those 2 starred columns are going to have normal balance sides. So I'll use cash as an example. Cash, of course, is an asset. It's got a debit balance of $15,200. I'm going to cruise through. I'm going to bypass adjustments. I'm not going to stop there. And then I'm going to just transfer that over to an updated one. Why did we get to just cruise through? Because is cash involved with adjusting? No, it's not. Now let's look at supplies. We start with a $2,500 balance. It's a debit. I'm going to cruise through, and I've got a road bump. If a debit account is all of a sudden credited, you'll notice we update it based on, is it an add or subtract? So again, supplies are an asset, which has a debit balance. If we cruise through, now had we put the $1,500 in a debit, what would we have done? Added it. But because it's in credit, it's going to be a subtract. The reason we cannot put the plus on the debit, the minus on the credit, is because when we get down here into some of the credit-based accounts, then it all switches. So I never tell students, don't put plus and minus up there. You're just going to cruise and ask the question, is it a plus or is it a minus? And then you update accordingly in the trial balance. Next, transparency. The next, is it just the income statement on the next one or both? It's probably both, yeah. Okay, so then really what's happened in here, I shouldn't say doesn't matter. It does matter. It's just that this is the full story right here. This is definitely the most accurate stuff after we've done all the adjustments. So then we have to say, okay, we're going to keep transferring, but is this a balance sheet account or is this a income statement account? Well, cash, supplies, prepaid insurance, equipment, notes payable, accounts payable, unearned revenue, owner's capital, owner's drawing does not appear here. Rather, it shows up on the balance sheet. So you wouldn't put it in income statement because those are all balance sheet accounts. Then you look in here and say, okay, then I've got revenue, expenses. Okay, those are income statement accounts with the exception of 2. There's a couple balance sheet ones. Oh, I can't move that right now, but you know, like accumulated depreciation. And what's the one where 2? Oh, AR. Okay, so these are used for the adjusting entries. We remember that from last chapter. It's just that they stick a couple balance sheet ones in down here below the line. The act of doing this instead of just listening to it is going to make a lot more sense. So we've done step 1, trial balance. We've adjusted step 2. We've adjusted the trial balance, step 3, and we've brought over to their correct home, step 4. I don't even want to talk about step 5 until we're doing it. But step 5 is getting all of your stuff to equal because they're not going to equal right away. So this is step 5 down here. That will be more when we actually pull the numbers. It will make more sense to you. I don't even want to talk about this one yet. We'll do it when we do it. Okay? We'll come back to that. From there, you're actually going to make your income. You're going to make your financial statements. So, you know, back here, we've got our numbers. Oh, we've got what belongs in income statement. We've got what belongs in the balance sheet. So now we're just going to push them into our financial statements. Okay. The income statement columns of the worksheet get actually placed in the income statement. The balance sheet columns of the worksheet actually get placed in the balance sheet itself and the owner's equity statement. And then they journalize and post their adjusting and closing entries, which you'll learn about tomorrow. So you would just take that column from the worksheet and build your income statement. You'd build your owner's equity statement, and then you're going to build your balance sheet. It's just you're using a giant, like, one-stop shop tool or worksheet to run your numbers instead. I'm going to teach this portion down here when we actually do it. So let's actually do it. Let's actually put this into practice by doing a full worksheet. We're going to do exercise 4.1. It's probably one of the folded pages, is it? Nanduri Company. If it's annoying to you to have it in the binder, you are welcome to take it out. Is your trial balance filled in? Yeah, I figured it would be. You will need your textbook, though, to know what adjusting entries we have to do. Nanduri, where are you? I see Nanduri on page 194. Okay, let's first take a peek at all of this. And I'm sorry, mine goes onto 2 lines, which is kind of annoying. Yours should all be singular on 1 line. So you've got all your account titles in. Do you have the totals randomly right here? And then again, here and here? Do you have all that? Do you even have the word net income there? It says net loss? No. Oh boy. It might be a typo. Let me just peek. Yeah, it's a typo. Right net income there. Whew. Yep, instead of net loss, write net income. I'm pretty sure it's a typo. Okay, so what you need to know, like all of this stuff up here, like leading up to the first total, what line number is your first total? 10, okay. And then you've got supplies expense, salaries and wages payable, and then another total. So would that be 11, 12, 13? Okay. These are accounts from the adjusting entries. I'd maybe make a little note to yourself near those because they just kind of stick them in. The way I learned accounting, it was all together. But the way they teach you, it's like they've got all your accounts that you use, and then there's those little, I call it the riffraff section, the ones that just exist because of adjusting entries. Okay. Now, you also have this in, correct? Yeah? Cool. Do you even have the 7360 with single and double ruling? Okay, so what that means, we've journalized, we've posted, it's getting time to do our end of fiscal year, end of fiscal period stuff. And arguably our debits equal our credits. So you might say, a new accounting person would say, well, what's the problem? Like isn't that the whole purpose of accounting, your debits equal to credits? But we know there's more to the story from chapter 3. We have to adjust all that stuff that we used, okay? Whether we used money or whether we used the event. Okay. I would like you to put a star right here. And then let's just make a note that the star equals the normal balance side. Would it help to label a few things? I think it would. cash, balance sheet. AR, balance sheet. Supplies, balance sheet. Accounts payable, balance sheet. Unearned service revenue, tell me what that is. It's a liability, so the balance sheet. Owner's capital, balance sheet. We get to service revenue, where does that belong? Income statement. And any expense, income statement, okay? In the riffraff section, I see supplies expense, which is income statement. I see another payable, though, which is balance sheet. Later, maybe you wouldn't even need to use those because you're pretty good at knowing where things go, but let's just assume that even one of you is confused. So then it's worth writing that in, okay? So on to step 2, because this was step 1. Step 2 is doing the adjustments, okay? I would assume in the book they outline them, yes. So I'm looking on page 194. We've got our worksheet in there. Cha-ching, the trial balance is there, cha-ching. Other data. A physical count reveals 500 supplies on hand. $100 of the unearned revenue is still unearned, and accrued salaries piled up of $210. Those are pretty simple adjusting entries. Would you agree? Okay. I see 1, 2, 3 of them. How are we actually going to label them here? A, B, C. Okay. I don't want to scare you, but when we get deeper into the book, we'll be into the J, K's, and L's. But for now, we have 3. In other words, A, B, and C. So a physical count reveals 500 supplies on hand. Okay, this is where I'd maybe grab a highlighter. Remember I told you you should have highlighters in this chapter. Oh, man. I got to get my highlighter function working. Shoot. I would highlight supplies. What's the second one? Unearned revenue? Yep. So then I'd highlight your unearned revenue. Is that 240? Okay. And then I don't like when mine are on 2 lines. It's really hard for you guys to follow that. And then the third one was salaries and wages, right? Okay. So even though there's nothing down there, I want you to highlight like where it would be. Does that make sense? Like it's a 0 right now. So we've got our supplies, our unearned revenue, and salaries and wages payable. According to our adjustments, those are the 3 that we're going to use. Cool? Let me get back to my pen here. Okay. So supplies. If we started with 1,880, it's telling us that we have 500 here. What did we use? 1,880 minus 500 would be 1,380. Now, the reason we are crediting that instead of debiting it is because do we still have 1,880 here? No, we've used that much. If we would have debited the difference, that means we would have added, but we're subtracting. Why do we put an A in front of it? Because it's the first one we're doing. Now, if we have a credit somewhere, we have to have a debit somewhere. Tell me where we are going to debit. Where are we going to debit? We have a credit to supplies because we used it. We're going to go down to riffraff and credit that, or debit that same amount. You should put an A there too. Yep. So I am going to, I don't know what happened to my tool, but whatever. Highlighter. So we started with $1,800 worth of supplies. Someone tell me why we are crediting the difference. We're losing it, okay? The tricky part there is they told us how much we had left. We had to find that number. A credit means there's got to be a debit somewhere else, and I highlighted it down there, okay? Let's do the next one. And I'm going to stand over here because then I can highlight better. So what's the next one? What's going to be B? Unearned service revenue. Our balance going in was $240. The adjustment said how much is still unearned? 100. So we used up 100 of it. So we're bringing the balance of what we still owe to 140. Now hold the show. Before we credited what we used, why are we debiting what we used this time? Because what kind of balance did it have? Credit. So if we'd credit 140, that means we're adding to what we owe, and we're able to subtract what we owe. When we fulfill the liability of unearned service revenue, what does it turn into? What's the complementary account? Service revenue. So I'm going to go find service revenue, and that's where I'm going to put the B partner. Cool? I'm going to back out a minute. I should have done this the first time. And it's okay if you highlighted like you did. I'm going to highlight all the supplies in one color. Then I'm going to switch pen colors and do the unearned service revenue in a different pen color. And then our last one, salaries and wages payable, didn't even have one. So it's starting to look like a little elementary art project here, isn't it? But did my pen colors help you, hopefully? Okay, so let's do the last one. Salaries and wages payable, what was its balance? Nothing. And according to the adjusting entry, how much happened? We haven't paid them yet. So this is an accrued adjusting entry. They did the work, we just haven't paid them. How much do we owe them? 210. So that is going to be a credit. Why? So far we've been doing everything opposite. If it was a debit balance, we credited. If it was a credit balance, we debited. But we're adding to what we owed them. We owed them 0. Now we're going to add 210. Debit and credit rules tell me if we have a credit, something has to be debited. Salaries and wages expense. You know how to do all of this. It's just that you've not done it in this format before. What can I answer right now? Well, we have one more little step to take care of here. We have to total it. And lucky for us, our debits and credits still equal. You can go ahead and just use that 1730. Notice what's happening. It's on line 13. Why are we not totaling it on line 10 like the other one? Because we needed the riffraff section. We had some accounts that were impacted just because the adjusting entries happened. So that's why it's on our new total line on line 13. Step 3, we have to update our trial balance. Now here's what's nice about the trial balance, the adjusted trial balance that is. Like the trial balance, it's a star. All of the normal accounts with their normal balances are happening, and this is step 3. So I'm going to take this line by line, and I'm sorry because some of them, it's going to look like some of them are double spaced, but they're not. Okay, let's start with cash. I'm literally going to jump in my cash car. I know this seems kind of dorky, but I'm going to jump in my cash car. It's labeled cash. And I'm going to start at the trial balance and hit the gas. If I have to stop in the adjustments, I might pick up some friends in my cash car, or I might get rid of some, depending if we added or subtracted to what the balance was. So I get in my cash car. Do I have to do anything in adjustments? No, I don't. And so if it helps you to draw the line and the smooth sailing through adjustments, by all means, do it. What you need to know about trial balance and adjusted trial balance, it's starred. It's always going to be the normal balance side. And balance sheet cash is an asset. It's got a debit balance. So I jumped in my cash car, and it was smooth sailing through adjustments. I didn't pick up friends, and I didn't kick some out of the car. Supplies is not going to be that easy. AR, sorry. No, sorry, it looks like you have to skip a line, but you know you don't, right? Same thing with AR. I jump in my AR car. It's also cute. 2440, and I can cruise straight through because I didn't pick up friends and I didn't get rid of any. In other words, I didn't add numbers or I didn't subtract numbers from my balance. Now we're to supplies. I get in my supplies car, hit the gas, vroom, vroom. It is not smooth sailing because I get my little debit balance supply car going, and all of a sudden, bam, I hit a roadblock. And I have to stop at that roadblock, in other words, in my adjusted and adjusted columns, and I have to figure out, am I adding friends to my car or am I kicking them out? Well, if I have a debit balance and all of a sudden there's a credit sitting there, am I adding friends to the car or am I kicking them out? I am kicking them out. I used them. They're gone for a new balance of 500. Now, if you get accounting, you can see a debit coupled with a credit. Yeah, it's a minus. But if it would help you to literally stop and say minus here, you can do that. Okay, we're leaving the asset world, aren't we? We're moving into the liability world, which means we're leaving the left side, we're moving to the right side. So now everything's got credit balances, okay? Just like the assets that was smooth sailing. I jump in my little account payable credit car and zip all the way across to the credit. This is not hard, it's just moving numbers from one spot to another. Same thing with unearned service revenue. No, it's not the same thing because that was impacted by kicking some friends out. I started with my credit balance and wham, I hit the roadblock right away. All of a sudden I've got a debit there. I'm going to say minus. I'm kicking you out. And I know my car example is really silly and kind of childish, but I hope it helps. If I get into a credit car and I hit a road bump of a debit, that's a minus. Sorry, friends, you're sitting there. Okay, still got another credit-based account. I get into a credit car, cruise through, and it's still going to be a credit. Service revenue. Credit car. It's a credit car. I get into my credit car, and I stop because there's a road bump, and it's another credit. Am I adding or subtracting friends to the car? And this time I'm adding. I got in my credit car, hit a road bump at another credit, so now I'm going to add. Why did that happen? Because what happened as part of that transaction? I turned unearned into earned. I get more money. So you see a plus. You actually see service revenue go up. Salaries and wages expense. Okay, now we're back to debits. Okay, these, remember, offset the value of owner's equity, so they have, even though they're on the right side, they have left side tendencies. Okay, so I get in my credit, or I get in my expense little debit card, whoop, whoop, and I'm cruising and I hit a road bump. Oh, it's another debit. So I'm going to add that to its total value. Miscellaneous expense. I jump in that debit card. It's smooth sailing. There are no road bumps, and it's still going to be a debit over here. I didn't add anyone. I didn't kick anyone out of the car. Now, are there more to do? Yeah, this is the top part. Now we got to get to the riffraff part, the extra stuff that exists just because we have adjusting entries. Okay. Do we need to do anything with totals? No, we don't. That doesn't get transferred over. That's a total. That's by itself. All right, let's jump in another car here. We have an expense. It's an income statement. We're not worried necessarily about that right now. Okay, we get in its car. It's an expense, so it's got nothing. So I'm driving with no one in the car. Cruising across. I get to another debit, so that means I'm going to add and bring its balance over. So it's 0 plus I hit a road bump and it's a debit. So a debit car is going to add a debit into the car. Add friends. And then the last one I believe is a payable. It's a credit card. We jump in with nothing. Our first roadblock is another credit. So we're adding it instead of subtracting it. And then are we worried about totals? We are not. That is the toughest part. What just happened with doing these whole adjusting entries and then either adding or subtracting, that's the toughest part of this section. What can I clarify for you? Other than we need to do our totals, and I'm just going to give them to you. Seven, 5, 7, 0. Happening on line, is it line 13? Okay, so we've got totals on line 10, we've got totals on line 13. If they don't equal each other, then you've got problems, and you maybe moved a number wrong, you maybe transposed it wrong, so then you'd go back and start looking. These, the trial balance, the adjusted trial balance, and the adjustments, they have to equal. You just got to know which car you're getting in. Are you getting in a debit car or a credit card? And then when you stop and hit the road bump, is it another credit or another debit? What time is it? 53. Oh, we can keep going. Good. Okay, now things are going to get easier because now if you can take a number and just move it, that's all. There's no math involved right now. We just, on step 4, we have to say, okay, adjusted trial balance, are you an income statement or balance sheet account? Okay. Let's do the top half. What line is owner's capital on? 6? Okay. That's all we're going to do is lines 1 through 6. So now we've done all the grunt work. We've got our debits and credits, and we added or subtracted them. Now this trial balance is accurate. Now the tool really is working as we try to build where things go, income statement or balance sheet. Well, I see balance sheet, balance sheet, balance sheet, balance sheet, balance sheet, balance sheet. The top 6 accounts are all balance sheet. So you really don't need the income statement columns at all. So if you feel comfortable, lines 1 through 6 under the income statement, cross them off. You don't need them. You really don't need them. You don't need the debit column. You don't need the credit column. Because cash, AR, supplies, AP, unearned service revenue, and capital are all balance sheet accounts. So again, you can star these two because these are all based on the number goes where the normal balance goes. So if it was a debit on the adjusted trial balance, it's going to be a debit over here. If it was a credit on the adjusted trial balance, it's going to be a credit over there. Don't worry about this space. These spaces are because my answer key looks silly. So can you move all the numbers to where they go? Can you see where a multicolored sheet laying down line by line would help you? You know what I mean? Like if you had a bright orange sheet, you could, it gets hard to put stuff in the right spots here. Okay, should we move on to the next line? I see income statement, income statement, income statement, income statement. Service revenue, salaries and wages expense, miscellaneous expense. We don't need the balance sheet columns over there, do we? So lines 7, 8, and 9, we don't need the balance sheet columns because those are all income statement accounts. That's the top section. Do we have a riff-raff section, though, that just exists because we've got a couple extra little accounts that we needed because we have adjusting entries? Yes. Remember, we are not worrying about totals at all. Totals don't get brought over. We've already pre-labeled, so you know where the supplies expense is going to go. Supplies expense is an income statement account, so that debit will get transferred over to that debit of the income statement. A payable is a liability that belongs on the balance sheet, so that credit is going to go way over onto the balance sheet credit. Here's how I learned accounting, and that's neither here nor there. When I learned accounting, we didn't have the riff-raff section. These were just embedded up here, but it's just how our textbook writers did it. So. Was that part pretty easy? Was step 4 easy? Because it was just moving numbers. That was, and you might want to label that, just like what we've been doing. What we just did there was step 4. We brought over income statement, we brought over balance sheet. Are we worrying about line 13's totals? Not really. You're not bringing those over. Here comes the part, step 5, that I said I'd rather do this with you to teach it to you than talk about it first, because it's going to make total sense when we do this. We need to add up the columns vertically, okay? Which one out of the 4? So the income statement debit, the income statement credit, the balance sheet debit, the balance sheet credit. Which one's really easy to do? Income credit, because there's only one. 2,540 is, that's the number. And what is that? An income statement credit. Is that our money in or our money out? It's our money in because that's revenue. The 3 debits are the expenses or money out. And so if it would help you to put revenue right here and expenses right here, kind of as like a little heading, you can. Because that's leading into what's going to happen down here at the bottom. Do our debits equal our credits? I would hope they don't. Because if our debits equaled our credits right now under income statement, what would be the problem? We wouldn't have made any money. So this is the this is the first time on this whole giant worksheet that our debits and credits are not going to equal because we don't want them to. We can't have our revenue equal our expenses because then we've made no money. Okay, and this is where accounting, if you're geeky like me, it's almost going to become tearful because it's amazing how it works out. Okay. Debits and credits are not going to equal on our balance sheet either because who gets to keep the net income? Who gets to keep the net income in his or her pocket? In this case, Nanduri, whoever Nanduri is. The owner's capital is going to be a little shorted over here because they get to keep the income. That's why I knew it was a loss because look at this, or a net income. Look at line 13. Will you put these 4 totals in? You're on line 13. Like we said, the revenue, the credit under income statement's easy because there's only one. And you'd add up all vertically, you'd add them all up. This is the red flag area. This is the merp, 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 merp. We've got a problem here, people, because does 2,300 equal 2,540? No. And so what I'd like you to do, you know that little does not equal sign? I didn't do it very good. It looks like this. Equal and does not equal. Am I doing that right, math folks? Okay. Those two do not equal each other. But in accounting, equaling our debits and credits is king. We need them to equal. Tell me right now, do we have a net income or a net loss? Carrie Zitterich, how do you know that? Yes. That's not new. You guys know that. So we need them to equal. Okay. So I'm going to go back just a moment. Well, and then now here's the other part. Are the credits bigger than the debits under income statement? Yes. Are the debits bigger than the credits on the balance sheet? Okay, so here's what we're going to go back to the other notes. I'd put what I'm about to show you in your notes. Let me see. Right here. When you get to, this is step 5. Right here, this is step 5 on a worksheet. How did that appear? Remember, more often than not, you're going to have a net income. So how do you know if you have a net income? When your income's, well, I guess it's just going to keep showing up like that. When your income statement debit column, oh, no, I don't want to do it that way. When your income statement credit column, it keeps appearing. Can you just not look at that yet? Okay. When your income statement credit column is larger than your income statement, oh my stars, is there some? I'm going to write it real. Oh my gosh. Let's do this. There. Hopefully this works. I really know what I'm doing, you guys. It's fighting with me here. I'll do it in Smart Notebook instead. Hang on. Ah, there we go. All right. When you have a net income, your income statement credit column is going to be larger than your income statement debit column for the exact reason that Carrie just explained. Let's put names with these. Your income statement credit column is revenue. Your income statement debit column are expenses. You know this. When revenue exceeds expenses, you have a net income. Carrie just explained that to us. I just put new names with it. When your income statement credit column is larger than your income statement debit column. So then you have to get these two to equal. So you would use a debit. I want you to just write debit here to get your income statement to equal. You'll see it in a minute, okay? You're going to use a debit to get the two to equal. Okay. Let's go back. So back down here, our revenue definitely exceeded our expenses, or our credit column definitely exceeded our debit column. So on line 14, We'll find the difference because we want these two to equal on line 15. Okay, so do you see what that looks like visually? We had a bigger credit column than we did a debit column. In other words, we had more revenue than we did an expense. So you would add, in this case, this is your net income number. We would add that to get them, to force them to equal. They didn't equal on line 13. That's a problem. We want them to equal, so we're gonna pull the biggest number down, and to force that equal, you're gonna put a debit in. Debit and credit rules in accounting tell me this. If I used a debit somewhere, what is going to happen on the balance sheet side to get them to equal? We had a debit here, so you are going to credit here. Here's the miraculous tearjerker that occurs. Remember, our balance sheet stuff didn't equal either. We're going to force them to equal, but by doing so, we're going to use that credit that had to be there because the other one was a debit. So we debited our net income. We're going to credit it over here, but no, here's the cool part. Who gets that money? The owner. Is owner's capital a credit account? Ba-bam. Would you like me to tell that story one more time with big numbers? I want to. I think it might even be, no, it's not. Okay. Okay, perfect. Can I give you a giant version of what just happened? So we have income statement, debit, credit. We have, hang on. Balance sheet, debit, credit. What was the income statement debit before they equaled? Can you give me the number? Does not equal, what was the credit? Okay, those didn't equal, did they? And we know this is revenue, this is an expense, okay? We need them to equal. We need them to be 2540 equals 2540, okay? Hold that show. On this side, what was our balance sheet debit? What was our balance sheet credit? We need them to equal, don't we? Stay, please stay. There's a missing factor here. Was it 230? Plus 230 here will get them to equal. I see a debit somewhere. This one has to be the credit, but that forces those to equal. This is the net income who gets to go to capital, which has a credit balance. Did it help seeing it big? Did it help seeing where the missing pieces were because they didn't equal and we got to force them to equal? Are you glad you were here today? Good. Have a great senior mentorship. I'm not going to see you for almost a week.